Today, talk is going to be done mainly by our colleague, Christopher Chye. We recruited Christopher out of Standard Chartered Singapore, and he heads our Singaporean operations. XREX has invested heavily into acquiring multiple licenses in Singapore, including the major payment institution license, which includes the digital payment token license, as well as custodian and fund management licenses. We say that this year is the year for crypto self-regulation. Why? Because as the Taiwanese government has just announced that this industry, the crypto industry, the virtual asset service provider industry, is going to be fully regulated by the FSC, right? And it's very likely to be regulated by not the Banking Bureau, but the Securities and Futures Bureau, right? 证期局, which is very, very good news for the crypto industry. Without regulation, the industry just cannot grow, because without regulation, when there's no clarity, auditors cannot come in. And if auditors cannot come in, then insurance companies cannot come in. Insurance companies cannot come in, then financial institutions find it really difficult to work with crypto service providers. In order to accelerate this process, we need to initiate self-regulation, because there's so much nuance involved in operating a crypto service provider or a crypto exchange. It's really hard for regulators to understand these nuances, right? And to come up with fair and reasonable rules to regulate this space. So it will be a lot faster for the service providers like XREX to come up with open source regulatory frameworks that can be referenced by regulators. And so we've taken on an initiative to come up with an open source audit framework for any virtual asset service provider's proof of user balance sufficiency. And we've picked the words very deliberately because we feel that the industry can no longer continue to create these terms that are outside of common accounting principles and standards, right? Because then nobody would understand what we're talking about. If we say proof of solvency, well, having your custodial assets sufficiently backing your custodial liabilities does not make your company solvent, right? So it should not be the term solvency. And so these terms should be deliberately established to match existing accounting standards and principles so as to make it easy for external auditors, banks, financial institutions, and regulators to really understand how to look at this industry and how to work with us and how to audit us and regulate us. And Christopher, through many months of work, has helped XREX reach a major milestone. And that is now we can announce that we, in terms of our custodial assets versus liabilities, and because of the open source auditing framework that we have published, the new audit authority for crypto exchanges, the network firm, which is a spin-off of Armanino, which has a lot of experience auditing crypto exchanges, has agreed to become an auditor for XREX to audit our custodial assets versus liabilities. And today I'm very happy to have Christopher introduce this new audit framework to you guys, especially designed to make it easy for auditors and regulators to understand how to look at the vulnerabilities and ledgers and assets versus liabilities of a cryptocurrency exchange. So let us welcome Christopher Chye.
Thank you, AWS, for inviting me here. I'm Christopher. I'm typically based in Singapore, which is very hot and sunny. So it's always thrilling to be in Taiwan. This is the audit workflow for proof of balance sufficiency proposed by XREX in consultation with the network firm. All right, let's get into it step by step. Step number one is Obviously, the exchange would have to provide the auditor with a full list of your asset wallets, right? So if you list Bitcoin on the exchange, provide your Bitcoin wallet. If you list Ethereum on the exchange, provide Ethereum wallet, Solana, Algorand, what have you. Make sure that all the coins and tokens that you list on the exchange, you provide the wallets to the auditor. And after this, the auditor will perform two types of control checks. The first one is the exchange has to establish proof of control. Right? You have to prove to the auditors that you indeed have control and ownership over these wallets that you claim to own. There is a variety of ways to do this. At XREX, we use the send to self method, which we find that is most palatable to us because we don't have that many wallet addresses. So send to self basically means at a previously undisclosed time, send a previously undisclosed small amount of token to a previously undisclosed destination wallet. Right? So if you can do that, then the auditor will be satisfied that you indeed own the wallet. There are many other techniques and methods as well. There's cryptographically signing the wallets and all that. But for XREX, we're using the send to self method. So that is the first control that the auditor would perform. The second one is called large transaction sampling. Now, this is the auditor trying to rule out the possibility that leading up to the audit, you arbitrarily send some additional assets into your wallets and then shore up your asset levels and then pretend that you have the assets, right? So speaking to the network firm, they've told us that they're not at liberty to disclose for what period before the audit they would do these checks, but they have given us some hints, like wink, wink, that it's usually 2 weeks prior to the snapshot date, the audit date, and 2 weeks after. So anyone running exchanges in the room, that's a hint for you.
So this is, are we borrowing money from other people?
Exactly. Are we borrowing money from other people? And also with proof of control, are we borrowing wallets from other people? Right? So they just want to establish that everything that you claim belongs to you as assets or your users' assets, you own and control. Cool. So steps 1, 2, 3, they have been labeled in green, and that represents the asset side of things. Now we're going to go into the more fun stuff, the liabilities side of things. So next step is simple. Basically, the auditor and the exchange, we just mutually agree on a snapshot date. So that is when we take a snapshot of all the account balances. Now, this is important because the auditor would want to real-time witness the creation of your customer balance report and also the transmission of the report to them. So in layman's terms, from your database, your engineers will write up a few scripts, transmute the data in that database into kind of like a CSV table, write a few more scripts, transpose that data into kind of like an Excel spreadsheet, a predetermined template, drag and drop that attachment into an email, and then send it across to the auditors, right? That entire process has to be cited, witnessed real time, to make sure there's no monkey business manipulation in it. For network firm, they're based in Florida, so we have to go with a remote work arrangement. So they're 12 hours behind us. So basically, we'll be doing it nighttime, our time, and morning time, their time. Okay, this is where things get even more interesting because the MRT track bifurcates into 2 tracks, right? So the auditor is going to do some stuff, and the exchange is going to do some stuff. I'm just going to get into it right now. Cool. I think let us focus on the right side of things for now. So this is where I think lies the beauty of this methodology that we have designed. Because this is where the exchange XREX would trigger mass notifications to all our users, calling our users to please self-verify your account balances. Right? Why do we do this? So if you can imagine in the past, you would rely on the company's internal audit to do whatever checks they need to do. If that's not good enough, you get an external auditor to come in to do whatever checks they need to do. If that is still not good enough, this is where we get the users to contribute and participate in these checks and balances. So it's a beautiful, powerful trifecta that we've designed and constructed. So this is the major difference, I think, if you compare our methodology to the other methodologies in the market. This is where the winning formula is. And through technology, we now make this possible. The auditor now has in his possession the full customer balances report. So auditors would do what they do, which is to select samples and then provide the list of samples back to the exchange, XREX. I think we do, yeah. Excellent, because on screen. So on the left is when you log in, when the user logs in, you would be prompted with this notification saying, please verify your balances as of this date, this time. And then if you click on start, basically you get to scroll through your balances which have been snapshotted as of the snapshot time and date. So in this example, it's that of March. And then you've got 3 choices for your response. You can say they're all correct. So then you click correct and it's a happy flow. Or you can click it is incorrect, or I'm not sure, please assist. In which case, we'll take you through a couple of workflows and we get customer support to come in to troubleshoot for you if there are any discrepancies in your balances. So this is just a reminder, fully voluntary. This is us prompting the user to participate in this exercise, right? Fully voluntary. But what I want to get into is when the auditor has selected your account as a sample. Now that self-verification ceases to be voluntary and it becomes forced verification. So if you look at the left, 7B, trigger forced verifications. So meaning the user has no choice. The user has to self-verify. And the benefits for this I'm going to describe in a moment's time. Now, for the voluntary self-verification, internally we would set a threshold. Right? Speaking to the network firm, the threshold is kind of about 10 to 15%. Meaning if you have 1,000 users, if you can get about 150 or 100 to self-verify, you would have done a very decent job, right? So internally, XREX has a threshold, which I'm not at liberty to disclose. But I've got some screens for the forced verifications in case anybody thinks it's a little bit too pressurizing. So basically, you get the same notification on the left, please verify your accounts. And then on the right, you're given T plus 3 days to complete your self-verification. Right, so T being the time that you received the notification, and then 3 days after, you may lose access to your account, right, or transactional abilities. And truth be told, it takes less than a minute to self-verify, so us giving them 3 days, we feel is pretty reasonable for all intents and purposes. Cool. Okay, let's look at 8B on the left. So that assumes a happy flow. The auditor sends out the samples. We force the users to self-verify. Everybody responds, and everyone is happy. Now, step 9 is where it can get potentially a little bit hairy. And this is the scenario where there are misstatements in the balances. Any discrepancies will be investigated. Now, if it is determined that the root cause is isolated, meaning it's not systemic, then it's okay. We restate the balances, and then life goes on. Now, but if it is determined that there are structural reasons as to why the balances are misstated, then basically the audit stops, right? Because if as an exchange, you can't even get your ledger right, you should just close shop, right? There's no point continuing with the audit. So now it converges back to a single line, and this is the latest buzzword in this industry I know, post-FTX Merkleization. Basically, the exchange, using the database, the customer balance report, would now create a Merkle tree. This Merkle tree would be handed over to the auditors. The auditors would perform some sampling checks. So this is basically the auditors doing the bottoms-up summation to make sure that from the leaf node all the way to the root, the balances sum up nicely. Right? Auditors who want to generate their own Merkle tree can feel free to do so, and then we can compare the root hashes. Auditor finalizes the report, and then we get to publish the report and we make it visible for all our users. So this is an example where in January, we publish a proof of user balance sufficiency report. And you can see right there with the tick mark, audited by the network firm. And if you click through that, the user would have the option of clicking on View PDF and see the full audit report. So completely transparent and completely available. Lastly, so last but not least, I think this is my co-founder Winston's favorite part. At the end of the audit, most would feel that that is sufficiently secure. But at this stage, we re-invite our users to self-verify their balances on the Merkle tree again. Right? The beauty of this and the magic of this is internal audit has checked. Maybe it's not good enough. External and independent audit has checked again. And if you still don't trust them, go ahead and self-verify again. Right? So again, this trifecta to us is the magic formula. Let's see if I got a screen. Yeah, so this is us. This is the user going in, looking at the Merkle tree, and performing its own verification. So there you have it. That is the end-to-end flow of the proof of user balance sufficiency proposed by XREX in consultation with the network firm.
Hi, everybody. I'm the co-founder and the CEO of XREX. So, future framework with PUBS, what you guys just witnessed is really just 20% of it. The complete report, we have to include first, the proof of users digital asset under the spot exchange. Second, proof of users digital asset under DeFi staking. The third one, proof of users fiat asset under custody. And these three reports are on self-disclosure nature, which will not enter into the balance sheet, which means it is actually users' asset, was never an exchanging asset, so it's also not exchange's liability. Therefore, if there's any liquidation event of the company, of the exchange, users' assets is totally safe. It will not participate in the liquidation event. And then on the right-hand side, we will have proof of users' fiat asset under non-custody. And then proof of user digital asset under margin, under loans, under open positions. This would have to be the financial reports in natural. You will participate in the liquidation event. What we want to state is that actually in this industry, we do need a lot of more and more people to participate. The banks, insurance companies, investors, users, and custodians. We need a regulator to regulate all that, to segregate every single risk responsibilities. But none of that is going to be possible if we are not audible. That is why XREX created the proof of the PUBS system, and we will open source. Once I want to state again, there is no differences between crypto finance and traditional finance. And auditing is nothing new. It's a framework. It is a time we should speak the same language. And it's a time for us to prove to the regulator that we can work with the regulator. Thank you, everyone. This is today's XREX presentation.